Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. Clearly, if you go to see from a market's perspective, 2180 is where we are trading at. A pretty flattish move is what we are witnessing. And we have Bank Nifty, which is seeing cuts of 2/10 of a percent. Auto stocks are seeing some good traction. M&M, Bajaj Auto, good moves coming in on those names. Whereas you are seeing some bit of pressure in terms of HDFC Bank, Infosys, Wipro from the IT pack also trading under pressure. Let's welcome in our guest Pankaj Pandey to discuss more in terms of the movers and shakers. Pankaj, good morning and welcome to the show.
Hi, good morning here.
Pankaj, let's start with the HDFC Bank. All eyes have been on this one now, taking into consideration how important it is for the contribution from an HDFC to Bank Nifty and Nifty to sustain at current levels. What's your view and what would you advise investors to do?
So HDFC Bank post merger with HDFC has got additional assets of 6 lakh crores plus and liabilities of 6.4 lakh crores. Now, historically, if you look at HDFC Bank has delivered quite superior returns with a steady growth and steady margins. But given this merger, a lot of uncertainties were there, and which is why the stock has been sort of trading in a very narrow range, both in terms of price and also in terms of valuation. Now, what the bank is looking to do is that they're looking to sort of build up the liability franchise where they're sort of expanding their branch network, say from about 6,300 in March 2022 to I think 7,800 now, and possibly doubling the next 3.5 years. Now, when you're sort of building so much of a liability sort of franchise, obviously the OPEX cost goes up, and which is where I think the overall margins are going to be sort of steady or a bit muted from that perspective because your cost has sort of gone up. And while there are cross selling opportunities which they are going to get and they are going to utilize, but I think because of this, the stock has been sort of under pressure. But I think historically they've delivered quite well on the most of the parameters, and which is why I feel that management guiding of 17-18% kind of a growth rate with ROAs of I think 1.8, 1.9 fairly look achievable, and which is why I feel that whatever price underperformance we are seeing is a good opportunity to buy with a target price of 2050. So that is what target price is on HDFC Bank.
Apart from an HDFC, Pankaj, a lot of other private and PSU banks. In fact, the PSU pack is spectacular in today's session. But let's focus on the private side. If you talk about a Karnataka Bank as well, 6% up move coming in today's session. What's the buzz and what would you advise investors to do?
So on Karnataka Bank, our target price is 285. I think where the overall confidence is coming from is that one, the management is guiding for 17-18% kind of a growth rate in FY24. The balance sheet is expected to sort of get doubled in 3.5 years time frame. Now, overall thing is that this bank is still available at 0.7 times and expected to achieve ROAs of 1.2%. Now, this is despite the fact that a bank is spending about 200 odd crores on the technological upgrades. So as a result of that, the cost is going to be sort of elevated. The benefits of that will accrue in future. And then they're sort of looking to sort of improve the overall credit deposit ratio and also keeping the margin steady at 3.5 to probably 3.7 odd percent. So I think good ROAs plus valuation below book, I think, is helping the stock to sort of do well. And our sense is that with the kind of spend what they're doing on the technology side, I think they're fairly sort of confident in terms of delivering a high teen kind of a growth. And which is why I feel that despite the run up, this has still sort of potential to sort of run up further and with a target price of 285.
Right. So that's with regards to where Bank of India, Karnataka Bank goes. Moving on, Bank of India is another one which is seeing a smart move in today's session. What's your view?
So I think here on the PSU Bank as an entire lot, if you look at, there are some things which are sort of working in favor for most of the PSU banks. One is, I think, what our sense is that most of them are expected to benefit from FCLR repricing, which is expected to happen in a quarter or two. And that is going to help the margins steady for most of them. Liability continues to be very good for most of the PSU banks. Obviously, there is not much of a challenge you see. Then there is an anticipation that the Indian bond might get included in the global bond indices, which can probably potentially lead to higher inflows on the bond side, and potentially it opens up the window for treasury gain for some of the PSU banks. And like I said, valuations continue to remain attractive for most of the PSU banks. Now, coming back to Bank of India in particular, this stock has sort of run up. Target price was 117. Now, this is a bank where overall, if you look at corporate book, is somewhere about 45% of the overall 5.2 lakh crore kind of advances what they have, and they have sanctioned worth of sanctions worth about 40,000 odd crores. So I think the corporate book, which was sort of lagging with the kind of sanctions already in place, I think can grow. And then I think the retail plus MSME book, which is forming 55% of the book, continues to sort of grow in line with the industry. Good part is that, like most of the PSU banks, the asset quality continues to improve. So I think previously the gross NPAs were closer to 15 odd percent. Now that has sort of come down to 6.7 odd percent, and plus 53% of the book will benefit from the MCLR because there is a book which is based on MCLR. So that is probably going to improve the yields for the bank, and credit cost is expected to be healthy. So, and it's trading at about zero point 0.7 times. So our sense is that both ROAs and valuations can improve. So which is why PSU as a overall lot looks good, and Bank of India is no exception to that.
Right. So that's with regards to where the banking pack is concerned. Now, moving on, you have a Bharat Electronics as well, which has been in focus. In fact, they've won a defense order worth around 3,000 odd crores. How are you looking at Bharat Electronics? Plus, the defense space overall is buzzing. I mean, do you think valuations are still reasonable to enter these stocks?
So yes, Hiral, valuation is a bit of a, I think, given the kind of run-up what we have seen, most of your PSUs or including the private ones are trading at elevated multiples. But I think the news flows continues to be very positive for most of the defense PSUs, including private counterparts. Like the order what we have seen today of 3,000 odd crores for Bharat Electronics. Here our target price is 160. Now, structurally, why we are liking this stock is that defense equipments are sort of getting modernized. So earlier, the share of electronic component used to be about 35%. That is inching up to 40-45% going forward. Now, this company had guided for order inflow of about 20,000 odd crores. I think till September, they've already got order inflows of about 14,000 odd crores. More than that, actually. And I think guidance is 20,000 odd crores. So those numbers look easily achievable. And I think current order book is also quite healthy at 3.7 times overall FY23 revenues. So our sense is that on the growth side, you get a lot of comfort where the company can keep delivering 15-16% kind of a top line growth and 17-18% kind of a bottom line growth. Valuations are definitely sort of the rich for most of the names, and even for this, but relatively, this is still a stock which is at attractive valuations. And which is why I feel that this company looks good even from a portfolio perspective with a target price of 160.
Right. So that's with regards to where defense names are concerned as well. Moving on, NCC. What's your view coming in on a NCC?
So NCC is there in news today because they've got a recovery of about 198 odd crores. Now, this is one company which truly is benefiting from the overall infrastructure spend what the government has been sort of doing. Here, our target price is 170. So they've got an order book of about 54,000 odd crores. Last year, they got somewhere about 26,000 odd crores. Order inflow continues to be quite healthy in Q1. So in Q1, they've got about 8,000 odd crores. In Q2 up till now, they've got order inflows of over 10,000 odd crores. So our sense is that they will continue to sort of deliver good amount of 18% kind of a growth on the top line front, and margin expansion of say 10.1% to 10.5%. On a big top line, the margin expansion of 40-50 bips is also quite significant, and which is why I feel that the bottom line growth could be at 25, 26 odd percent. So it's a good infra play, and you really do not see too much of debt lying on the books. So they've got a debt of about 1100 odd crores, which will come down with this inflow, and possibly our sense is that you will see further recoveries of about, I think, probably 150 odd crores in this year. So from that perspective, debt reduction is going to happen. I think the only challenge is that the interest rate outlook is still sort of on the higher side. So whenever we see this interest rate tending to sort of turn softer, I think that will provide the necessary leg. Otherwise, everything is in place for the stock to sort of do well with a target price of 170.
Right. So that's with regards to where overall NCC goes. Moving on, Jamna Auto is another one. In fact, ancillary stocks, Pankaj, have been on the move. And this is last week as well, after we heard of, there's a possibility of a PLI scheme coming in. Supplies to EVs is something that is being looked at as well. And second consecutive session where we're seeing a smart move in the auto space itself. How are you looking at a Jamna Auto?
So Jamna Auto is again one of the few OEM ancillary companies which have got very great financials. So they've got one of the highest ROCs. Here our target price is 135. Now this company is largely providing parabolic springs or primary leaf, so which is largely used in the CV, and we all know that CV, especially the MHCV cycle, is sort of turning out good given the overall infra spend. I mean, we used to sell about 2.5 lakh MHCV last year. Our sense is that, or sorry, in 2020. Possibly this number is about 3.6 lakh last year, FY23. And we are again expecting this number to sort of touch 4 lakhs. So I think the core business continues to see a good amount of growth, and they largely cater to all your big names. I mean, be it Tata Motors, Ashok Leyland, or Volvo. Now, good part is that company is looking to sort of diversify from this. So they're looking at that overall 50% of the revenue should come from new products. So though they have launched agricultural implants and a number of other products, and which is why I feel that overall their growth is going to be pretty good going forward. So overall turnover growth could be about 15 odd percent. And again, bottom line growth is expected to be about 26 to 27 odd percent. ROCs are quite good at 25%. And this company is net cash positive. So we feel that even at 20 kind of a P multiple on FY25, this is a good stock to be into. And this has been a very consistent sort of performer, outperformer within the ancillary pack. So which is why I feel that good overall setup plus venturing into new areas, which is again a very good ROC kind of a business. I think the stock will sort of continue to deliver well.
Right. Very lastly, Midhani, another one to focus on, smart moves coming in. Clearly, last couple of trading sessions as well have been pretty strong. Last week has been pretty good, I think, if I'm not mistaken, for Midhani along with the other metal names. What's your view?
So Mithun is again, while it is in the specialized alloy or titanium alloy segment, but largely catering to the defense and space industry. Now, this is one company which hasn't really done much in the last few years. So last 3-year CAGR revenue would be about 7 odd percent. But our sense is that this is probably going to change largely because they've got about 1,600 crore kind of order book, and which should get executed in the next 1.5 years. So that would imply that they can deliver about 20% kind of a growth rate. Now, the reason for liking this company is also that when we sort of hear that HL is going to manufacture a lot of aircraft domestically, or for example, even choppers domestically, and this company manufactures specialized titanium alloys. So, which are key components are required, or key metals sort of required for machining or even for engines. So this company is expected to sort of play a key role, and plus, I think when the government is looking to open up the critical mining area, so obviously the opportunity pie for this company increases because a lot of import substitution can happen. And like I said, last 3 years they haven't done much, but our sense is that with order inflows of about 1,600 odd crores, they are expected to do well, and with outlook sort of keep getting better, and which is why I feel that profit growth could be about 18 odd percent. So this is another defense PSU, I would say, which is looking to sort of catch up. And given that we haven't seen much of a price performance relative to others, valuation might look high at 40 times, but I think one needs to take cognizance into fact that last 2 3 years the company hasn't really sort of delivered growth. But our sense is that that is about to change, and which is why I feel that a target of 465 looks good for a company like this.
65 for Madani is one should be watching out for. Thank you, Pankaj, so much for joining us on the show and sharing the views. So clearly, we are seeing stock-specific action, but overall, in terms of where markets are concerned, it's a pretty flattish move. And one of the events that we have been tracking closely from a macro perspective is the special session of Parliament 2023, which has begun as well. In fact, there is what we're picking up is that there is a ruckus in the Lok Sabha as the 5-day special session has begun. And you have Om Birla, who's the Lok Sabha speaker, who has actually started with his opening address as well, clearly indicating that the decision taken during the G20 summit are for the global good. And G20's focus is now on more human-centric approach. PM Modi's vision and guidance led to consensus on even sensitive issues in the New Delhi declaration issued by the G20 leaders. So a lot of comments coming in there. You will be shortly able to hear and watch what's happening in the Lok Sabha as well in the special session of Parliament from now. That's all that we have on this session. Thanks for watching, and please stay tuned to BQ Prime.